Good morning, all. Camelback Trading 2724 coming to you this Monday morning, May 11th, and we're looking at the market profile of the SPY ETF here on Window Trader. And after a very, very nice finish to the day on Friday, going out with a price probe and a price spike, the bulls have shown that once again these price probes have shown to be very ineffective lately. We had a lot of downside ones last week. We had the upside one. They used to be very good guides to the day going forward. They have not been, as they've mostly been rejected. There was a lot of areas where there were buyers here on Friday, again, all being taken out early this morning. Average volume is down to under 105 million. So at some point you really hope to start being able to hit the average, as both on the downside and the upside, volume has been slow. I went home with a very small put position, the 295 puts that expired this Friday. I did it not because the market's bad. I did it because I didn't think, after having the gap on Friday, which held, by the way, this is not a right thing. We had that bad tick. I don't know. I'm surprised we're showing it here. But I figured before they would attempt to come out of an inside month to the upside, we would at least back off a little bit. That's what they're doing this morning. All right. So destinations for this morning. On the upside, right now we're just over an hour to go. We're going to use the 9 wide, which was going to be a downside destination of 291.49. Then we have Friday's high, which is also a weekly high of 292.95. And then 294.88, which is the monthly high, poor high. And if we come out of it, it would be taken out an inside month to the upside. For the downside, we'll start with, the price probe 292.14 and the price spike 292.05 look to be getting firmly rejected. Then we had the afternoon pullback low of 290.76. Then the daily low of 289.86 and filling the gap at 78 cents. So right now we might not only fill the gap, we might possibly gap lower this morning. Possibly. Below that, we have 287.13, daily low, poor low, and then 286.41, which was 11 wide from May 6th and is also a naked POC. So, what's the game plan for this morning? Well, with just over an hour to go, if we're to open back above the afternoon pullback low, you have to remember that it's not going to have the same effect as it did on Friday. I was looking for an afternoon pullback low for something to lean on for a bunch of reasons. We had higher value, the indices were all higher, and the odds of going back to POC were very good. Everything is context. Now this morning, if we open above it, can I lean on it? Sure. But it's not as firm as it was on Friday. If we get below it, get below value, I would be out of that trade. Now, we look like we're trying to open in balance, but at the low end, and certainly below value. If we are to fill the gap, well, then the next destination I have isn't until the 7th low, which was the poor low. So if we open on a gap, and again, it's hard to see on here because of what's going on here with this bad tick that we had. Friday's low is 289.86. We're trading at that exactly right now. Now, if it's a 4 or 5 cent gap, am I going to jump over it? All over it? Probably not. But if the gap becomes 20, 30, 40 cents, I probably would take a put play because I certainly know my out if we fill the gap. Your first destination on the downside would be your pre-market low, which right now is 289.66. Now you had 8 wide, I believe. 8 wide. Again, I like 9 wide or more, but it would certainly be at least a stopping point at the POC from the 7th and then the poor low. So if we do gap low and do not fill it, there's no reason to get out of that put play until you get more market generated information. As far as a call play, is there one for me here? There is not. If we're to gap lower, and then fill the gap and get back into Friday's value, then possibly I would look for a call play to get back to Friday's opening, and then ultimately the POC from Friday. But I'd probably need one time framing up in B period to make that decision. Let's go to the charts. I'll just show you the weekly and the daily. So the weekly, a very, very strong finish, right? We had an ugly finish the previous week. Last week, we took out that previous week's low to stop the one-time framing up to put us firmly in balance. The Bears had their chance. Right now, the Bulls are still we're in balance, but at the upper end of this balance. Right? This week's high of 288.52 to me was kind of important because it was the top of that triple top. Bulls certainly don't want to see last week's low tested, because if you do that and take that out, you're ultimately going to see those two lows in the low 270s. Also, 287, always that critical level for me, still in play. And then the daily, again, we came out of a 3-day balance to the upside on a gap, which held. So the ball was in the Bulls' court. We have a gap to lean on to go for that monthly high. Well, right now, the Bears are defending that, as we're looking to not only take out Friday's low, but possibly gap lower. If you do and get accepted into this 3-day range, well, 283.78 would be your ultimate destination for this 3-day range. And then its $20 or $21 range would come into play on the downside. Come check us out at camelbacktrading.org. Have a great day trading, and we'll recap at 4 p.m.